Hi, this is Jatin Dhiman. Welcome to Index Theory's post-market report. Risk off session. Volatility spikes as indices slide around percent. Let's begin. Market sentiment is bearish, with broad risk off session in play. Nifty 50 closed at 25,049, down 241 points or 0.95%. Sensex ended at 81,538, falling 770 points or 0.94%. Nifty Bank saw the sharpest drop, finishing at 58,403, down 727 points or 1.23%. As declines were led by Bank Nifty with weak breadth, Nifty 100 breadth is heavily skewed to the downside, with 86 declines versus just 14 advances, pointing to overwhelming bearish pressure. On the volatility front, India FYX is at 14 and is up 6%. Risk premium is increasing, and higher swings are expected. Most sectors were in the red, with IT down just 0.7% and FMCG lower by 0.61%. Metal fell 0.83%, pharma slipped 0.94%, and auto declined 1.13%. Deeper cuts came from infra at 1.69%, energy at 1.92%, and PSU banks at 2.27%. Realty saw the sharpest drop at 3.34%, anchoring the fall, while IT acted as a relative safe harbor. The primary drag came from the Adani Group sell-off, with Adani Green down 15%, Adani Energy Solutions down 12%, Adani Enterprises down 11%, and Adani Ports down 7%, intensifying downside pressure. Earnings disappointments also weighed. Indigo's Q3 FY26 profit plunged around 78% due to disruptions and labor code costs. Ixigo's parent dropped about 16% post Q3 on higher costs. Top gainers and fundamental wins stood out, led by Tanla Platforms up 12%, supported by a Q3 beat and CPaaS re-rating. Heinz Inc. also moved higher by 5%, with the price at $6.99. On the defensive side, flows were visible in Dr. Reddy, Chul, and Techme, each rising around 1%. Nifty 50 is currently at 25,049, with super trend support marked near 24,139. RSI 14 is at 11, indicating an extreme oversold condition. MACD readings at 147, 72, and 74 point to bearish momentum. At the same time, Supertrend suggests bullish support is holding. Bank Nifty is currently at 50,473, while the Supertrend support is marked at 57,955. The price structure is showing underperformance of 1.23%. RSI at 14 is at 50, which is neutral with room to fall. MACD reads 102, 7, and 95, pointing to bearish momentum. FII activity remained weak, with persistent selling pressure along with soft global cues leading to a breadth collapse. On the currency front, rupee weakness added pressure, and FX moves continued to shape risk sentiment and market flows. Sector-wise, the aviation space saw high volatility after Indigo's results. Nifty 50 closed at 25,049. On the bear side, keep an eye on price action near S2 at 31, especially with RSI in extreme oversold territory. For the bull case, Nifty needs to reclaim the pivot at 25,298 to open the path towards resistance. Key levels to tracker S1 at 25,160, pivot at 25,298, and R1 at 25,428. Bank Nifty closed at 58,473. In the bear case, a breakdown below 58,824 can open the path toward S2 at 58,449. For the bull case, the pivot needs to be reclaimed at 59,199. Key levels to track are R1 at 59,574, pivot 59,199, S1 at 58,824, and S2 at 58,449. For a reversal, market breadth needs to improve, with advances moving above 60 from the current 14. Along with that, sector rotation must support the move, and the realty sector should stabilize or turn green. Till these conditions are met, caution remains in place. Also, keep an eye out for oversold bounces in Nifty as RSI is below 15. Indices are damaged right now, but Nifty is still deeply oversold. Volatility is expected to stay high, with VIX around 14 as the market digests Adani-related volatility and earnings misses. The approach here is simple: wait and watch. Like, subscribe, and share your view in the comments. Hit the bell for updates. Comment below. With Nifty's RSI at 11 and VIX up 6%, do you expect an oversold bounce or more downside?